Hello and welcome back to this Money Controls live stream. You're watching Closing Bell with me, Lovisha Darad. And we are back in the red despite starting the day in the green. We're deep into the red and Nifty has also shaved that 25,200 mark as well. If you look at Sensex is also down by over 200 points. And now this marks for both the frontline indices down for the third consecutive session as well. If you look at majority of the sectors, that has plunged into the sea of red. But yes, if you look at from a sectoral perspective, that is your Nifty IT index, while it was holding up well in the green, but once again it has succumbed to the selling pressure. 0.2% declines coming in for the Nifty IT index as well. On the other hand, if you look at metals, that is also down with about 0.8% declines. Nifty Realty also not doing well with about nearly a percent decline itself. Bank Nifty index, after 3 days of gains, that has got snapped, and you can see Bank Nifty down with about 0.4% declines as well. Yesterday we did see some recovery from the day's lows, so we were expecting that a positive sentiment would be there in the markets today, but then while we did start in the green, but we are once again in the negative territory as well. So yes, we are down for the straight consecutive session as well. But of course, the major spotlight for today's market has been the LG Electronics blockbuster debut. Now the stock has dipped in the red, given that the broader end of the breadth of the markets has been quite negative. But yes, we did see about 50% premium listing, and that is what cheered the markets also in the initial sessions as well. But yes, even after that, there's a consensus buy for LG Electronics from the brokerages as well, with the street estimating about 2,000 as the highest target price for LG Electronics as well. But it's coming to the top gainers and losers on the Nifty. If you look at Max Healthcare, it's seeing some movement today, 1.6% gains coming in for the counter. Apollo Hospital also seeing a gain of about 1.2%. So both the hospital stocks have been doing well in this market. On the other hand, Tech Mahindra ahead of its second quarter performance, that has gained some traction, given that TCS also reported some good numbers, and today we did see HCL Tech reporting its good numbers from the revenue perspective as well, and of course the company did raise its organic growth guidance as well. Wipro also doing well. We can see 1% gains coming in there as well. ONGC with about 0.4% gains, and on the losing end, if you look at Tata Motors, definitely the demerger has been playing out on the counter. That is why you're seeing nearly 40% drop on the counter as well. Dr. Reddy's Lab, another top loser on the Nifty, 1.8% decline coming in for there as well. Bajaj Finance, Bharat Electronics, JSW Steel, some of the other losers on the Nifty 50. But yes, to decode what the last minutes of the trades look like and what lies ahead for the markets, let's quickly get on board with our technical expert of the show. Joining me is Osho Krishan, Senior Analyst, Technical and Derivative Research of Angel One. Osho, good afternoon. Wishing you the best of festivities. But yes, today marks the third consecutive loss for Nifty. How do you see the next levels looking out for the benchmark index?
Very good afternoon, Lovisha. Firstly, thank you for having me at the show, and wish you and all the viewers a very happy and prosperous Diwali, upcoming Diwali. So, coming back to the equity markets, then no doubt today we have witnessed a very strong sell-off from the higher zone of 25,300. Almost from there onwards, we have corrected 250 odd points. But in the latter half, we have again shown some kind of resilience in the Nifty 50 index, and market again have the 30-day some volatility was definitely expected. 300 remains a sturdy hurdle for Nifty, and only once it breaches the zone of 250 to 300, then only we can see some kind of continued momentum coming back in the market. Till that time, the market is expected to stay on the sideways. 25,100, 25,050 is supposed to act as a very strong support levels, while 25,250 to 300 remains the study hurdle for the benchmark index.
Okay, all right. Let's talk about Bank Nifty index also, because that has snapped 3-day gains. What are the next levels that we can watch out for, Osho? Because we have some banking majors which will be reporting results starting tomorrow.
For Bank Nifty, again, we have seen a very strong vertical kind of a rally, and even on the daily time frame chart, we have witnessed an inverse head and shoulder pattern breakout on Bank Nifty. So I'm expecting that there might be outperformance in the banking space. While on the very short term point of view, 56,800 remains a very strong hurdle, while the target remains on the higher end. 57,200 is the immediate target on a positional point of view. So I expect that overall the trend is on a bullish front, on a positive side. but any kind of dip towards the zone of 56,000 should be auguring well for the buyers, and one can look for buying opportunity on any kind of dips in the upcoming days towards the zone of 56,000. On the higher end, 56,800 will be seen as the first target, followed by 57,200 for on a positional basis.
Okay, all right. Let's also talk about metal stocks because once again we are seeing that all the metal counters have seen profit booking today, given that the broader end of the markets was also quite negative. But how would you suggest investors to approach it? Is this a point? Would you suggest them to buy on decline?
See, overall, there has been a strong momentum. The whole metal space has been into a strong momentum, and one should remain selective with the stock specific front from the metal space. Like Vedanta is on the verge of giving a fresh breakout, and I'm expecting that in the coming period, the counter can witness a very strong breakout and can surge towards the zone of 500, followed by 520 from a medium term point of view. But looking at the recent vertical rally in the whole metal space, one should remain selective and being very exclusive with the stock selection. Vedanta is a positive technical setup on the daily time frame chart. Even Hindalco is also looking positive, but any kind of dips in Hindalco can be seen as a buying opportunity. So one can look for accumulating the counter around the zone of 730, 720, while on the higher end, the expected target remains around the zone of 780 to 800 from short to medium term point of view.
Okay, all right. Let's also talk about FMCG stocks because that also remain under pressure today. Osho, what are you making from the FMCG basket, and of course anything that you're liking from the space?
See, FMCG counter have lost the sheen that we have seen in the last previous 2-3 months back. Overall, the counter has been into a very strong consolidation right now, and there is a possibility of further consolidation in the whole FMCG basket. So, if there will be any kind of breakout in the FMCG space, then we can look for opportunities like Dabur is looking positive on the technical front. It is having a very strong risk reward ratio. HUL definitely being the large cap is looking positive from a medium to long term perspective. So one should stay active and look for opportunities of any kind of positive momentum coming back in the FMCG basket. But Dabur and HUL will be the preferred pick from FMCG space.
Okay, all right. Let's talk about one stock in focus then, individual movers, that is your HCL Tech. Well, the stock did hold well in this market after the company's September quarter earnings was quite reassuring after the first weak quarter that the company saw. If you look at the revenue and margin growth, both of them came ahead of their estimates, driven by better than expected performance in its services business as well. The company has also retained its overall revenue growth guidance, which is at 3 to 5%, but it has narrowed its services revenue growth guidance to about 4 to 5% as well. But analysts, they have largely maintained their ratings on the counter, and they have maintained their price targets on the counter as well. If you look at Jefferies, they've maintained its buy call. It has also raised its EPS estimates by about 1%, and it expects about 9% EPS CAGR in about FY26 to 28 as well. Nomura has also given out a buy call on the counter, while given that they expect strong margin performance going ahead in the second quarter and in the upcoming quarters as well. But yes, Osho, today also we are seeing good traction in HCL Tech, and TCS also, gave out a beat performance. How are you placed on both of these counters?
See, overall, I'm quite bullish on the IT space. All the negative has already been factored in with the price movement that we have seen in IT majors. HCL Tech, firstly, has seen a kind of a vertical rally from the zone of 1380, now hovering around the zone of 1500. So I'm expecting that in the short term period, there is a strong possibility for the counter to retrace towards the zone of 1600, 1620, which is the 200-day simple moving average. So overall, at current levels, the risk reward looks very much favorable in the IT space, and one can look for buying opportunities from short to medium term point of view. For HCL zone of 1620, then from there onwards, we can see further positive momentum coming back in HCL Tech. And TCS on the other side is looking very positive on a value front because TCS has been making a lower lows, lower highs kind of a pattern on daily time frame chart. But looking at the historical development, historically it is having a very strong support around the zone of 2700. So at current levels, it is looking very lucrative. One should definitely try to accumulate the count at current levels on immediate basis or on short term basis. 3400 is the target that I'm expecting in TCS. But the time it breaches the zone of 3400, then from there onwards, there can be strong bullish reversal in the IT giant. So I expect one should definitely try to look for buying opportunity at current price.
Okay, all right. Let's talk about another stock in focus. That is your Just Dial. The stock is not doing well. 4.5% cut coming in for the counter after the company reported its September quarter results. Now, while brokerages Citi and Novama both have maintained their buy calls on the counter, but they have marginally cut their respective price targets for Just Dial as well. Now, what made the brokerages very cautious on the counter is that is your subdued collections that the company has seen during the September quarter as well, and that's why they have trimmed their near-term growth and profitability expectations. Osho, the stock is not doing well and it has been stuck in a lower range for quite some time. Can we expect more downside in the upcoming days?
Historically, the zone of 800, 810 has provided very strong cushion to Just Dial. So I'm expecting that on the lower end, the downside is very much limited. But as of now, there has been no sign of respite or relief that can be seen on the daily or even weekly time frame chart for Just Dial. So one should wait for a thorough move beyond the zone of 880, which even coincides with the long-term moving average of 200-day simple moving average. So if it breaches the zone of 880, then from there onwards we can look for some buying opportunity, and from there onwards even there can be a possibility of bullish reversal in the counter as well. But as of now, the counter lacks any kind of momentum, so it's better to stay sidelines until someone is already holding the position, and it will be advisable to keep a stop loss of 800, or for a fresh accumulation perspective, better to wait for a breakout above the zone of 880.
Okay, all right. Let's take another stock in focus. That is your RBL Bank. Today, the stock is holding up marginally well in the green at this point of time. After Moneycontrol reported that the Middle East bank Emirates NBD is in advanced talks to acquire a majority stake in the lender. Another reports have stated that both the parties have been in talks for the last few months, and Emirates NBD is keen on picking up more than 51% stake in the company as well. And that is why you're seeing that the stock has been holding up well in the green. 0.5% gains coming in for there as well. Osho, the stock has been on a structural uptrend. Today also the stock seems to be doing well. What is the next target that we can watch out for?
RBL Bank specifically have seen a kind of a rounding formation on the downside. So I expect that with the multi-month breakout with the September month's development, I expect the momentum should continue in the counter. On the higher end, the immediate target comes around the zone of 340 to 350. But looking at the vertical rally in the counter, one should not be very much conservative. One should remain conservative and try to accumulate it in a staggered manner, because there is a possibility of some kind of profit booking towards the zone of 280 to 275 from a short term point of view. But from a medium term perspective, I'm expecting that this breakout will be sustained, and on the higher end, 340 to 50 will be the target that one can see in this counter.
Okay, all right. Now let's shift focus and talk about MTR Technologies, because the stock did hit a 52-week high in today's trading session, and it did see about the biggest single-day gain since February this year as well. According to reports, Brookfield has backed Bloom Energy with about $5 billion investments for fuel cells, which will power the AI data centers as well. Now, Bloom Energy is one of the key clients of MTR Technologies, and that is why you're seeing good gains in the counter. 12% uptake coming in for there as well. Osho, once again, the stock is doing well and it's building up on its September breakout. Nearly 3%, 13% gains coming in for the counter.
Yes, after a very long period of consolidation and correction, the counter have started gaining and have research on a very strong basis from the zone of nearly 1400, and from there onwards now it is hovering around 2200. So from risk reward point of view, the counter is now at overheat terrain. So one should definitely wait for some kind of cool off towards the zone of 1900 to start accumulating the counter. But overall, with the kind of development that this counter have seen over the last 3 weeks, there is definitely a bullish turnover that can be seen in this counter. On the higher end, I'm expecting a target of nearly 2350 to 2400 from a very short term point of view, but it will be advisable to wait for some kind of correction towards 1900 and then can accumulate for 2300 as a target.
Okay, all right. That is the stock target coming in for MTR Technologies. Let's shift focus and talk about Irida because that stock has been doing quite well on the back of its September quarter results. 3% gains coming in for the counter, and it has recovered from the day's low itself, where we did see that the net interest income has risen by about 50% on a year-on-year basis. Profit has also grown in strong double digits with about 41% increase on a year-on-year basis. Asset quality has improved on a sequential basis for the company, where the GNPA has improved to about 4%, while net NPA has improved to about 2% from 2% from 2.06% from the previous quarter as well. Today also the stock seems to be holding well, definitely on the back of its good results, 3% gains coming in for the counter. Osho, what do we see the next levels to be? Good results and the stock is reacting well to it.
Yes, the counter has seen some kind of a strong base formation around the zone of 150 from the past 3 to 4 weeks. The counter has been giving a kind of a hint for a breakout from the current levels, but there has been no significant development that was seen in the counter. But with the kind of volume development over the past 1 or 2 trading weeks, I am expecting that there is high potential for the counter to have a sustained breakout on the higher levels. Immediately, I am expecting a target of nearly 168 to 170. And once it breaches the zone of 170, then we can see a bullish reversal. And then the target comes around the zone of 190 from a medium term point of view. But at current levels, the counter is at a very lucrative risk reward ratio. So one can definitely try to start accumulating the counter at current levels. On the lower end, 138 and 140 is a very strong support level. So accordingly, one should keep a stop loss in the counter for a target of nearly 170 for the first for a very short term point of view. And once it breaches that, then we can see even 190 to 95 in the medium term perspective.
Okay, 190 target. We can watch out for Irida as well. Good results, and that's why you can see a good momentum building on the counter as well. Irida up about 3% as of now. But like we were talking about the September quarter results, let's shift focus and talk about ICICI Prudential Life because that is also marginally up in the trade today. Of course, it did recover from its day's low, and however, right now it's showcasing of about 0.5% gains coming in for there as well. But yes, coming to the numbers, how it stacks up on the right now. If you look at net profit figures up about 18% on a Y-on-Y basis. Gross premium income that has also risen by about 19%. However, if you look at AP has declined by about 2%, while VNB has risen modestly by a percent itself. Margins has also improved, but it is nearly in line to how it was in the last previous year as well. Today also the stock has been holding well, but however 0.5% gains coming in for there as well. Osho, the stock has been stuck in a range. Today it's a mixed set of September quarter results, and the stock did see a breakout, but once again it has it's off its days high level.
Technically, the counter is still into a corrective phase. It is in the formation of making lower lows, lower highs. So better to wait for a decisive breakout above the zone of 615. If it happens, then only one can look for buying opportunity in the short term perspective because overall the trend and the technical parameters all are showcasing a negative biasness in the counter. So wait for 615 levels to get a decisive breakthrough and then only can look for buying opportunity. If it happens, then there is possibility for the counter to retest the zone of 655 to 60 in a very short span of time. So one should definitely keep this counter in the watch list. Any breakout above 615 can provide a very strong buying opportunity in the counter.
Okay, all right. That's the view coming in for ICICI Prudential, coming out with its mixed sector of performance as well. Let's shift focus and talk about Cochin Shipyard, given that the company has bagged mega order from a prominent European client. Cochin Shipyard has defined the order in excess of 2,000 crore rupees in value as a mega order, and the stock is doing well, 1% despite the tepid market scenario as well. Osho, if you look at the stock, Cochin Shipyard, 1% gains coming in for the counter, but the stock has been in consolidation mode. Can we expect the sideways trend to continue?
Overall, the counter is at the very strong support of the breakout neckline. So near about 1780, 1800 from where we have seen a kind of positive traction in this counter in the last previous month. So from there onwards, I am expecting that these levels will be very crucial for the counter. If it breach the zone of 1780 on a closing manner, then we can see a further continued momentum on the lower end towards 1700 as the target. So at current levels, it is at a very crucial juncture. If someone is already holding the position, then better to keep with a strict stop loss of 1760. While if there will be any followed up buying traction in the counter, then only we can see some kind of positive momentum. But as of now, the counter is into a sideways formation, and one should wait for a decisive breakthrough to happen. It is at a very crucial juncture, and it will be advisable to wait for 1 to 2 trading session to direct the trend analysis for the counter.
All right, let's take another stock in focus. That is your Anand Rathi. The stock has been doing well today, and it did hit an all-time high today itself after it reported its strong Q2 figures. If you look at the numbers, revenue was up about 31% on a year-on-year basis. OM has expanded to about 22% from a year-on-year perspective. And today the stock is seeing good momentum, 3% gains coming in for the counter. Osho, the stock has seen good gains today. What can we expect? What is the next target that we can watch out for?
See, for Anand Rathi Wealth, this counter has been into a secular uptrend. There has been cycle of higher highs, higher lows, and with no sign of any correction post the listing of the counter. So I expect the momentum should be on the higher end. It might attract even higher levels in the short term perspective. So one should definitely stay invested in the counter. For now, 3000, which is the breakout zone, that should be kept as a stop loss. And on the higher end, technically there is no target because the counter has not seen any kind of retracement, but it will be advisable to trail profits on the higher end. 3000 will be the first support if and one should stay invested till the momentum persists in the counter.
All right, let's also discuss about Bank of Maharashtra, because the stock did come out with its second quarter performance, and the stock is seeing a decline of about 3% at this point of time. If you look at the net profit from a Y-on-Y perspective, the net profit has increased by about 23%, operating profit has increased by about 17%, NII has also increased by about 16% itself. But yes, the stock is seeing some negative reaction, 3.5% cut coming in for the counter. Bank of Maharashtra, how are you placed on the counter, Osho?
Technically, the counter was having a very strong resistance around the zone of 58 to 59. And looking at the recent development, it was expected that if it breaches the zone of 58 on a conclusive manner, then we can see some kind of positive traction coming in the counter. But nonetheless, the counter have seen some kind of resistance at those levels and is into a corrective phase. So on the lower end, the support still lies around the zone of 53 to 52, which even coincides with the long-term moving average. And on the higher end, 58 to 59 still remains as a sturdy hurdle. So one should wait for the breakout to happen above the zone of 59, then only can look for buying opportunity. Or for short-term traders, it will be advisable to try accumulating the share around the zone of 53 and try exiting it around the zone of 58.
Okay, all right. That is the view coming in for Bank of Maharashtra. Try to exit it around 58 for the counter itself. That's what the view is coming in for there as well. Let's shift focus and talk about Kranthi Microsystems. The stock is looking like it has hit an upper circuit, 10% upper circuit. That is where it is had been. And of course, it's got the approval from Research Designs and Standard Organization for its version 4.0 of the Kavach system. And it is one of the top plays when it comes to the Kavach stock plays when it comes to from there, and that's why the street has been favoring this particular counter. And today we can see that it is 10% upper circuit for Kranthi Microsystems. Any thoughts, Osho, for Kranthi? What lies ahead for the counter?
I'm really sorry, I do not track the counter, so I will be not having a very strong technical view in this one.
Okay, all right. All right, shifting focus, Osho, let's talk about Tata Motors, because the stock has seen demerger of its two entities, your passenger vehicles and the commercial vehicle business. And that is why you're seeing that the stock has, of course, adjusted to that particular price. But how would you suggest investors to navigate this particular counter?
See, again, that is a very tricky question, and the answer is also not very much conclusive until we see the listing of the other half of Tata Motors. But looking at the recent momentum and the recent kind of a valuation that it was into, it was not performing well and even was top underperformer from the peer space. But I expect that with the kind of valuation and consolidation the counter was into at current levels, one should remain invested in the counter and wait for the other company to get listed, and then can make a proper view that whether one should remain invested in the counter from a long term perspective or not. But looking at the recent development, I will be advising to stay invested in the counter from a medium to long term perspective.
Okay, all right. Stay invested in the counter from a medium to long term perspective. Let's shift focus and talk more about earnings, because we have two Q2 results which will be due tomorrow. First, we'll talk about HDFC Life, which will be reporting its second quarter results, where brokerages have been expecting about higher single digit growth in AP and 9% increase in VNB as well. But margins could see some mild deterioration due to loss in GST input credit costs as well. But yes, today the stock has been down, but Osho, the stock counter has been an outperformer so far this year. What lies next?
Overall, the counter is still into a positive trajectory. Looking at the recent development, the counter is hovering around the neckline of the breakout levels near the zone of 720 odd levels. So I expect the momentum should be on the buying front, and any dip towards the zone of 720 should be auguring well for the buyers. While on the higher end, 780 to 790 represents a very strong hurdle for the company. So I expect that any dip towards 720 will be providing an opportunity to add positions, while on the higher end, 790 will be the first target that one can expect and try to lighten up their position from a short term point of view. But if there will be any kind of breakout above the zone of 790, then from there onwards, we can see another 80 points of rally on the higher end. But from shorter term point of view, 720 and near about 790 is the immediate trading range for the counter.
Okay, all right. But yes, the last rates coming on your screen, where the Nifty has settled at this point of time, 25,122, that is where we are at. And of course, we have taken off the 25,200 mark as well. But yes, it has been the weekly expiry dates. That is why some price swings was observed in the markets today, where we did see that the sell-off emerged in the second half of the trading session. And that is why Nifty also succumbed to the selling pressure. And right now, it is closed below that 25,200 mark, below even 25,150 odd levels. Let's take a look at how Sensex have settled down about 300 points gain. 0.4% decline coming in for Sensex as well. Bank Nifty also has snapped about its 3-day gains, and it has slipped into the negative territory ahead of some big numbers which will be announced by the banking majors ahead this week as well. 0.2% declines coming in for the Bank Nifty index. If you look at the broader end of the markets, mid caps and small caps, both of them have succumbed to this selling pressure, and you can see they have underperformed the benchmark indices, so to say, at this point of time. But yes, all the sectoral indices have ended in the red. Nifty IT, be it your Nifty IT, be it your Nifty Metal, realty stocks, FMCG, all of them have reeled under the selling pressure. India VIX, if you look at that, 1.4% uptick coming in for there as well. And all in all, it has been a very negative setup for the counter as well. Even for IT stocks, despite HCL Tech reporting an upbeat second quarterly results, it failed to cheer up the market enthusiasm as of now. But yes, let's shift focus and talk about again individual movers right now. Osho, coming back to you. Since we were discussing about HDFC Live, let's also shift focus to Axis Bank. That will be reporting its second quarter results as well. The lender is expected to report a decline in both the NII and profit because of higher credit costs that is likely to squeeze margins. But yes, in the past month, the stock has picked some of the pace. Today, however, the stock did not do well. But what lies ahead?
Overall, looking at the recent development in the last month, the counter has already gained approximately 120, 140 odd points. And looking at the recent development, the technical parameters have also been towards the overbought terrain. So there is a possibility that there can be some kind of profit booking or cooling off in the counter towards the lower levels of 1130 to 20 in a very short term point of view. But overall, the trend has turned bullish, and any dip towards the zone of 1130 should be auguring well for the buyers. While on the higher end, the resistance lies around the zone of 1220 to 30. So to 1130 to 1230 is the trading range. With a positive biasness, one should look for buying opportunity on the dips and should try to lighten the positions on the higher levels.
Okay, all right. That's the view coming in for Axis Bank, which is scheduled to report its second quarter results tomorrow. And now let's shift focus and talk about Trent as well, because that was one of the top Nifty losers. Osho, what is your take on the counter? Second days of consecutive loss, and the stock has been trading below that 5,000 mark.
Yes, overall the counter is into a very steep correction. The technical parameters have also turned towards the oversold terrain, and there is no sign of any kind of respite or recovery in the counter. But historically, the zone of near about 4500, 4550 and 4500 has given a kind of a support to the counter. So I am expecting that in the short term perspective, there is a possibility of a reversal, but one should wait for the reversal to happen and then only can take positions in the counter, because currently the counter is hovering below the short term moving average also. So if any kind of jump or any kind of recovery happens in the counter beyond the zone of 4800, then that will be an apt levels to accumulate the counter. On the higher end, one can expect near about 51, followed by 5200 as the immediate target. But overall, 4500 is a very strong support zone, and I'm not expecting that it should breach the zone of 4500 in the near period.
Okay, all right. All right, just one last question before we let you go, Osho. I know we discussed a range and a whole host of stocks, but anything that you're finding interesting, and what are your top picks at this hour?
At this point of time, there are two recommendations that I will quote for tomorrow. First one is Sriram Finance. This counter have seen a very strong momentum in the recent period and has even seen some kind of consolidation at the higher levels, forming a kind of a flat pattern on the daily time frame chart. So one should try to have a buying opportunity in Sriram Finance at current levels. 658 will be the advisable stop loss, and on the higher end, the target is expected around 696, followed by 700. The other counter, which is looking very positive, is Indigo. We have seen very strong short covering in the last two trading sessions. The counter has also emerged above the consolidation zone and now placed above the short-term moving average. So now the trend has been turning around on the positive front. So one should look for buying opportunity on Indigo at current levels. The stop loss should be placed around 56.50, and on the higher end, I am expecting a target of nearly 59.50, followed by 6,000 from a very short-term point of view.
Okay, all right. Those are the stocks that we need to watch out for. But yes, so with that, we have to let you go, Osho. But thank you so much for your time and joining us.
Thank you so much for having me at the show.
All right, let's take a quick check of the markets. Of course, it has been the third consecutive session where the Nifty and the Sensex has slipped into the negative territory. Of course, it has been the weekly expiry day, and that's why you saw the price swings which emerged in the second half of the trading session, as a result of which Nifty has slipped below that 25,200 mark as well, also below that 25,150 mark as of now. But yes, all of the sectoral indices have plunged into the sea of red. We did start off with a good set of results coming in from TCS, given that they have reported an upbeat set of quarters, and then we followed by HCL Tech also, where brokerages have largely maintained their buy recommendation on the counter as well, given that the company did report its revenue and margins which came in ahead of what the street was expecting as well. But yes, tomorrow more results will be coming in. We have Axis Bank and HDFC Life which will be reporting its second quarter results. But yes, let's take a look at what Moneycontrol poll has been estimating on how Axis Bank is expected to fare. Well, according to Moneycontrol polls, Axis Bank is set to see about 0.7% year-on-year decline in the net interest income, while the net profit is likely to see a sharp fall of about 14% on a year-on-year basis. But yes, it's been the sluggish loan growth which analysts have been expecting for Axis Bank in the second quarter results. Loan book is expected to expand by about 8% on a Y-on-Y basis, while deposits are projected to rise about by 2.5% on a sequential basis and 9.6% on a Y-on-Y basis. Asset quality is one of the reasons that is leading the deterioration, and which could impact the second quarter performance as well for Axis Bank, where analysts have been expecting that GNPA ratio is expected to rise to about nearly 2% from 1.4% in the year ago period. Margins are also expected to contract by about nearly 30 to 40 basis points on a year-on-year basis, given that it will be reflecting its full impact of the RBI's repo rate cut and higher credit costs, which could weigh on the profitability as well. But yes, another stock which will be reporting its second quarter performance, that is your HDFC Life, where the both premium income, that is your APE and VNB, is expected to log in high single digit growth on a year-on-year perspective. But yes, all eyes will be on the margin trajectory, given that majority of the life insurance players have been shifting their focus to traditional products and away from the ULIPs as well. So we'll be watching out more on the management commentary as well, and of course the GST impact on the life insurance player, and we'll be watching out for the growth ahead as well. So with two major stocks that will be reporting, and all eyes will be on that, and that's what we'll be watching out as well. But yes, coming to that, let's now shift focus and begin the festive fervor away from the earnings season. We are coming to our special Diwali programming, where market experts will decode what sectors stood out this Samvat and what the upcoming Samvat 2082 looks like. And of course, we'll be also taking our hot stock picks from this space. So let's begin the fireworks and the fallout themes. Alright, in this edition of Fireworks and Fallout Themes, we put the spotlight on railway sector, the capex story that hasn't been sweet in Samvat 2081. We did see the stocks like RVNL, Texmeco Rail, IRCTC all slipped in Samvat 2081 as investors worried if it has been a pricey bet. But what could Samvat 2082 look like, and whether the bulging order book by the Railway Ministry, the heavy spending plans and the most talk about Kavach plans could turn around the sector and the railway stocks back on track is something we will be understanding from our special guest of the show. Joining me is Kranthi Bathini, equity strategist at WealthMills Securities, to decode more about the sector. Kranthi, wishing you the best of festivities this year and a very happy Diwali.
Thank you, Lovisha. Thank you for the season greetings. For you and the viewers at Moneycontrol, wish you the season greetings.
Kranthi, let's start and talk about the sector in focus, because railway stocks did garner some traction in the past couple of months. But if you look at the Samvat's performance, all of them have witnessed correction. So explain us what has kept them out of investors' attention, and how does the way forward, Samvat 2082, look like?
Lovisha, yeah, the sector has been in a momentum zone in the past 12 months back. And from there onwards, the stock have witnessed some kind of a consolidation, making the higher tops, and there was some kind of a long corrections in majority of these railway stocks were concerned. Even though the stocks have run up ahead of their valuations, and the valuations look stretched for many of these stocks in the sector. So last 1 year, from the last Samvat to the current Samvat, the stocks have been in a consolidation phase. So that was the reason behind the stocks spending some kind of a time-wise correction. Their order books are in place at this point of time. This year, the execution capabilities also witnessed in a strong way. Around 56% of the budgeted capex have been spent during this year for the railway stocks are concerned. So wherever some kind of excesses have been built up for many of these railway stocks, in fact, these stocks have been a multi-baggers in the earlier years. So that was the key reason for these stocks to be in a consolidation phase in the past 12 months.
Okay. Kranthi, let's just focus, in between April and July 2025, we did see that the railways board spending has stood about the highest among the large CPSEs and government agencies. Do you expect this capex push to translate into earnings? Because if you look at the last quarter, that has been fairly subdued across the board.
Yeah, we can see the same kind of capex spending to go ahead in the coming quarters also. Yeah, we had a long monsoon and an extended monsoon during this year. So normally in the first half of the year, some kind of a subdued capex spending we witness for any kind of a companies. So next 6 months are crucial for these companies. So we can see some kind of a momentum to pick up. But one thing, Lovisha, here the key reason for the stocks consolidation and underperformance has been excesses that build up for these stocks. These stocks have been a multi-baggers starting from its bottom prices, and these stocks have witnessed some kind of a higher tops. So that's where the consolidations for many of these companies we witnessed. Now their valuations are attractive. The price momentum has taken a pause. So if any investor want to have a decent returns, one can start building up their portfolios with majority with railway stocks, but don't expect the same kind of multi-bagger returns. But they still can deliver some kind of a mid-teen kind of returns going ahead.
Mid-teens returns, all right. But yes, sir, railways have always given a good narrative after the defense theme. But if you had to, suggest a fresh investors to enter at current levels, would you advise them, or would you say them to wait for some time?
By and large, if the investors have a longer term horizon, one can start accumulating these stocks. It should be very stock specific. In the previous bull run, what happened is, especially any company that's involved in railways, there was a price momentum, what we witnessed. In fact, many of the companies, they were in a bubble territory, okay? And from there onwards, we can see some kind of a moderation of the valuation. Now, after this healthy correction, we can see these stocks looks attractive at this point of time for a medium to longer term perspective.
Okay. But between the two, if you look at PSU and private railway basket, which one would you prefer, and why would that be?
One thing is, some stocks have been in a consolidation phase. Okay, how these companies are executing these orders, it can be both the PSU or it can be the private. Okay, it all depends upon their execution capabilities. For example, stocks like BML, RVNL still looks attractive to me at this point of time. And from the private basket, Titagar looks very attractive to me at these valuations. So these are the top three picks where the investors with a medium to longer term, okay, they can pick up these stocks for a medium to longer term perspective.
Okay. Kranthi, Street has always been concerned between the disconnect of railway stocks, fundamentals and valuations. But what is your opinion on this? I mean, you did say that we are expected to grow in mid-teens, but from a valuations front, are railway stocks still at a pricey valuations?
That's an interesting question, Lovisha. But the recent correction from its peaks, the stocks looks attractive at this point of time. The railway theme is to stay for some more time. They have a clear-cut order book visibility, but where these companies are working, that's extremely crucial. One need to look at individual stocks at this point of time, which of the segments the company is working. So the wagon demand and also the modernization of railways and infrastructure spends are going to be there for next coming years. So that's where the demand for majority of these railway stocks are coming.
Okay. But let's also talk about two stocks which have grabbed the Kavach orders for enhanced safety and efficiency on key routes. That is your Concord Control, Kernex Microsystems. How do you see these counters riding the Kavach opportunity, and what lies ahead? Because both of these counters have surged stellar in the past 1 year.
Absolutely. Even stocks like Kernex Microsystems has locked in upper circuit today also. There were no sellers for the stock today. It was up by 10%. That's where investors need to be little bit cautious. Okay, that's where the valuation stretch come into these stocks whenever they enter into a momentum zone, and these stocks tend to be in spend in a time-wise correction also. But Kavach is going to be a long-term story going ahead. So the stocks which are involved in the Kavach theme is concerned, they are going to receive the strong order books, and earning visibility is clearly there. But whenever the valuations look stretched, that's where some kind of a profit booking also advisable for the investors in a medium to short term perspective.
Okay, all right. Just one last question before we let you, Kranthi. Then, what are your picks from the railway space, and what is the reason behind that?
Yeah, my for this season for railways, BML looks very attractive to me. They look this PSU have a diversified business model. They are into railways. They are taking the advantage of the bullet train network that's going to come up, and also the defense space also giving the diversification for this stock. So BML looks very attractive to me, and RVNL, the strong player with respect to the railway infrastructure theme is concerned. And after the moderation of the stock prices in the recent past, looks very attractive to me. The railway infra theme is going to be the key role for RVNL. At this point of time, one can start adding RVNL for a time horizon of more than 1 year. And Titagar wagons looks very attractive to me at this point of time. The wagon theme is going to be there, both in terms of the passenger as well as the goods wagons are concerned. So these are the three stocks one can keep on their watch list and add at dips.
Okay, all right. Add on dips for all of these three railway counters. But with that thought, and of course, the discussion on the railway theme, we have to let you go, Kranthi. But once again, wishing you a very happy
Thank
Diwali.
you.
Thank you so much for your time and joining us.
Thank you.
All right, with that, we have come to an end of this edition of Closing Well. We will be back with tomorrow with more stocks and special Diwali programming in focus. So do stay tuned to us. And before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, AI trade chat patterns right on your WhatsApp. So do subscribe to Moneycontrol Pro today and subscribe right now.